Hey everyone, welcome back to Corporate Decoder, the place where we strip away the corporate jargon and tell you what's really going on behind those filings. Today we're diving into a filing from Fortress Credit Realty Income Trust, and let's just say to raise a bit of interesting movement on the share front, and some dividend news that might make you raise an eyebrow. Alright, let's get straight to it. Fortress Credit Realty Income Trust, or FCRIT as we'll call them, has put out a report, and the earliest event they're talking about happened on the 2nd of February 2026. This isn't a regular check-in like a quarterly report. This is an 8K, which means something significant happened that the public needs to know about right away. Think of it like a company's breaking news alert for investors. So, what is the big news? On the 2nd of February 2026, Fortress Credit Realty Income Trust sold more of their common shares. They issued and sold a pretty good chunk of shares, 586,937 to be exact. They pulled in about $11.8 million from this sale. Now, the interesting part here is how they did it. They're saying these sales were exempt from the usual registration rules for selling stocks to the public. This usually means they sold these shares privately, not through a big public offering. This is often done with sophisticated investors or in specific situations where the company claims it does not need to go through the full lengthy registration process required by the Securities Act of 1933. It's basically a shortcut to raising capital, but it comes with its own set of rules and limitations. Let's break down where that money came from. They sold different classes of shares. For instance, they sold 9,216 Class B shares for $185,000. Then there were 82,703 Class J -4 shares, bringing in $1,666,660. They also sold 39,639 Class S shares, which generated $798,000. And a big chunk came from Class I shares, with 455,379 shares sold for a substantial $9,166,460. So, when you add all these up, you get that $11.8 million total. They're basing the price of these shares on their net asset value per S-share as of the end of 2025, which is a common practice for these types of income-focused trusts. Now, moving on to another significant announcement on the 30th of January 2026, just a few days before they announced the share sale, the company declared distributions for each of its common share classes. These are essentially dividends or payouts to shareholders. For example, Class B shareholders were set to receive a gross distribution of $0.1547 per S-share, but from that there were fees. They had a shareholder servicing fee, a management fee, and in some cases a performance fee. For Class B, after a shareholder servicing fee of $0.0167, the net distribution was $0.1380. Class R shareholders saw a similar gross distribution of $0.1547. After a shareholder servicing fee of $0.0141 and a management fee of $0.0166, their net distribution landed at $0.1240. Notice there is no performance fee for this class. Class J -1 shareholders received a gross distribution of $0.1547. After a shareholder servicing fee of $0.083 and a management fee of $0.0166, their net distribution was $0.1298. For Class J -2, the gross distribution was again $0.1547, with a shareholder servicing fee of $0.0042 and a management fee of $0.0166. Their net amount was $0.1339. Class J -4 shareholders had a gross distribution of $0.1547. However, they faced a shareholder servicing fee of $0.084, a management fee of $0.0210, and a performance fee of $0.0136. This brought their net distribution down to $0.1117 per S-share. This is a key difference that shows how different share classes can have vastly different net returns due to their fee structures. Class S shareholders received a gross distribution of $0.1547. Their fees included a shareholder servicing fee of $0.0143, a management fee of $0.0210, and a performance fee of $0.0138. This resulted in a net distribution of $0.1056 per share. Finally, Class I shareholders, who brought in the most money in the share sale, had a gross distribution of $0.1547. They had no shareholder servicing fee, but a management fee of $0.0210 and a performance fee of $0.0128. Their net distribution was $0.1209, and Class E shareholders received a gross distribution just like many others at $0.1547, but with no fees taken out at all, thus their net distribution was the full $0.1547. These net distributions were to be paid out around the 3rd of February 2026, either in cash or reinvested into more shares for those participating in their distribution reinvestment plan. Now, let's look at the big picture here. Fortress Credit Realty Income Trust is essentially an income-focused trust, meaning its primary goal is to generate income for its shareholders, often through real estate investments. The fact that they conducted an unregistered sale of equity securities suggests they needed to raise capital quickly, possibly to fund new investments or meet other financial obligations. This isn't necessarily a red flag, but it is a signal that they might be operating in a way that requires flexibility and speed, rather than going through the slower, more public channels of raising money. The varying net distributions across different share classes highlight how complex fee structures can impact shareholder returns. Investors in these types of trusts need to pay very close attention to the specific class they own and the associated fees, as they can significantly eat into the gross distributions. The Class E shares with no fees look appealing on the surface, but investors need to understand why those classes might have different investment strategies or investor profiles. Overall, Fortress Credit Realty Income Trust seems to be actively managing its capital and shareholder distributions. The unregistered sale shows a proactive approach to funding, and the detailed distribution breakdown demonstrates a commitment to transparency regarding how shareholder money is handled, though the fee structures themselves warrant careful examination by any potential investor. It will be interesting to see how these capital infusions and distribution policies shape the company's performance in the coming periods. Alright, that is our breakdown of Fortress Credit Realty Income Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.